joining us on Market Guru today, Mr. Balasubramanian from Birla Sun Life. Thanks so much for being with us. Great to have you with us.
My pleasure.
Let's just talk about the market outlook. What are you making of it? We've seen a bit of consolidation. Of course, FIs haven't been buying in as heavily, but a little bit of retail interest seems to be coming back.
Correct.
How are you making sense of what we're seeing at the moment?
I think the way we have been seeing the market is, one is it had its own run up quite a lot, and on the basis of expectations, on the basis of certain variables that are changing actually, which are more favorable for the market point of view. The way we see is, I think we are in a consolidation phase. When I mean the consolidation phase, that now the results will start coming in, and also the global outlook that currently now is changing, more in favor of oil price coming down, commodity prices being weak, and the interest rates increase rather. It's now is getting postponed to some extent. So all those things, I think, is in some sense, I think, setting the directions for the market once again. But clearly, from the broader market point of view, I think we are consolidating quite nicely at the current level, which essentially means that as things starts improving as we move forward, we will probably get the directions more reasonably accurate.
Sure. But the interesting bit out here has been that the last couple of days has been this little bit of concern, coming in terms of how the global markets have been panning out. And you mentioned that the crack in commodities is clearly beneficial for emerging markets and for India as well.
True.
But do you believe that one should be concerned about the way some of the European markets, the way US markets overnight as well, and how they pan out? I mean, no doubt all these guys have enjoyed a good rally. They're just cracking off from those lifetime highs. But are you worried looking at those charts?
No, not really. I think from India point of view, it seems to be what's happening in the global market looks to be better for India.
Okay.
I think the single most factor is an oil price coming down.
All right.
I think anything that is happening actually around the global market at this point of time, given the fact that the demand supply situation, especially in oil, have changed completely, more in favor of more supply that is coming in than the demand, and also there is a high level of realization that even at the current price they will make money, and still they will probably hold on to the price even at the current level of where it's trading around $91, which essentially means from the India point of view, I think it's good, big positive. Okay. And from a global market point of view, it's not the question of the growth is not coming back. I think it's a question of whether it is coming back now or is coming back say next 1 year time frame or not. I think that's the question mark which is there. I think the US is, I think this is not the concern of growth. I think it's the concern of the currency. These are some of the things which I think in my view will play probably more favorably for India.
Okay. Bala, let's bring it back home. We've got question marks on global growth, but our growth numbers are also not looking that encouraging right now.
True.
But there seems to be some amount of strength, like Abba mentioned, in the retail participation in the market. That seems to be coming back and putting faith back, especially in the equity side of it. How's business looking at this point, and what's the retail investor really thinking, and where's the interest really coming in?
I think we have seen for so many number of years, if the outlook is positive, confidence is high, and optimism is actually getting supported by whatever the action that is happening on the ground, then normally money comes actually in the market. I think the first time I am seeing after a very, very long time, after 2008 crisis, the mutual fund industries have been getting the net inflows in equity. At the same time, the inflows into the debt funds also have been reasonably good. That's again given the fact that the confidence on the economic growth coming back is reasonably high. Although the fact that the last 2-3 weeks, we have seen the industrial production number is not up to the mark. And we have also been seeing actually that the overall manufacturing output has not been up to the mark. And despite that, I think the convictions and confidence on the economic growth coming back is so high. I think that's also now reflecting on the money coming in. And the last piece, of course, is the effort that is being put in. I think the yesterday's number on CPI, I think clearly shows the downturn of about 1%. Clearly shows that the effort that is being put in by both the Reserve Bank of India as well as the Government of India, it's somewhat I think now is beginning to pay off. The question is too early to come to judgment, or is the question is the trend I think which you need to watch out for. I think that's that reflects on the way I think money flowing in the market.
We've got assembly elections coming up this week. How closely are you watching out for the results of those, particularly in light of the fact that the market has for a while now been waiting for some big bang reform announcements as well from the government at the center?
Of course, anything which is of this nature coming from two states and definitely is something we won't need to watch out for. I think it's coming from the fact that I think any that changes that is coming actually in the respective states could definitely have an impact with respect to the seats sharing that could come potentially in the Rajya Sabha, which essentially means that any policy framework that is being put in probably the probability of that getting actually the passed actually in the both the parliament as well as the Rajya Sabha will become relatively easy. I think that's only the from that angle one has to look at it. But at the same time, given the fact that whichever the government which is there in the center is there for next 5 years, and they are of course looking at doing a lot of things more in the interest of the broader economic growth as well as in the respective states in terms of reviving the whole manufacturing sectors and reviving actually the whole consumer sentiment and reviving the trade pattern that is actually varies from one state to the other states. All those things ultimately I think need to be looked at. I think election is only one, but I think there are many other factors I think will probably play a bigger role in terms of next I think 4 to 5 years kind of downtrend market.
Yes, since we are on the topic of elections out, I just want to squeeze in a question on divestment. That was the whole buzzword a couple of weeks back when markets were in strong momentum. Do you believe that the risk appetite has changed, or do you believe it's still, I mean, if divestment was to bunch up a little bit and come in right now, there's still appetite in the market?
I think the divestment, I think there is enough appetite which is there. Actually, I was traveling actually overseas a few weeks back and meeting with some other pension funds.
Okay.
I think clearly the appetite for India is far higher. I think the confidence on the change the guard at the center also seems to be pretty high, and the appetite for Indian equity, given the fact that the commodity prices are coming down and there is enough effort that is being put in to bring down the inflation, and whatever the effort that is being put in by the government will ultimately result in actual growth coming back, both in terms of economic growth as well as the corporate earnings getting improved, and because of which I think in general the tendency actually towards Indian equity has been very, very high. That's why I think unlike the last many years, and this time the PSU divestments, including the ETF kind of divestment, will probably sail through quite well.
Alright, let's just take a very quick break. We've still got a lot more to discuss with Bala, including themes and of course that he's looking out for in the market right now. Stay tuned, we'll be right back. Welcome back. Here at our Market Guru, we're in conversation with Mr. Balasubramanian of Birla Sun Life. Thanks so much for being with us. Bala, themes, what are you tracking right now? Because it's a little confusing at the moment with everything kind of taking a little bit of a breather. Defensives have run up so much. Cyclicals are really lagging in terms of catching up with regards to the investment cycle or earnings. So what would you at this point advise?
Yeah, I think it's interesting. I think if you look at the whole market in the last few months, wherever there is a strong balance sheet, very strong free cash flows, high dividend paying track record, they are all trading at high PE multiples, and they were actually lagging behind from the broader market perspectives. At the same time, cyclicals, which of course have been running behind in terms of performance quite significantly, they all have caught on quite well. I think we are now reached a stage, both the cyclicals and the asset-backed companies, as well as on the consumer-driven companies, all are now reached certain levels. Now it's a time actually for looking at the bottom-up stock picking approach, which of course most of the times we do that. At the same time, sometimes we need to also play a theme because of the undervaluations or discount, actually the substantial discount to the market, etc. And now we have now reached a stage. It's not the question of a theme which I think one has to look at it. One has to look at actually what the kind of opportunities the markets are giving. I'll give you some few examples. For example, the export-driven companies, they continue to of course benefit not only out of the rupee dollar being very, very strong, they also benefit out of the global economy picking up. So you see actually the certain kind of trend emerging. But that's not related to the theme, but ultimately it's related to the one, relative valuation to the broad market, and second is what are the earnings surprise that could come as we move forward in terms of the numbers. As long as the earnings surprise are going to come, purely on the basis of the visibility that the companies I think will be able to actually generate, automatically I think those stocks actually become actually the buying opportunities. That's the way we look at in terms of building the portfolio.
Yes, since you mentioned about earnings from a stock specific point of view, what's the general expectation? Is this quarter going to be something which is going to probably replicate what we saw last time around? You're expecting it to be a muted one, and probably pickup's going to be towards the second half of this fiscal. What are your expectations when we talk about this earnings season?
I think the way we see is we will probably see an improvement.
Okay.
I think clearly one of the area where we had high level of belief that most of the Indian companies the last 2 to 3 years have really managed the balance sheet quite well, either in the form of cutting the debt or in the form of reducing the cost and so on and so forth. I think clearly we are at a stage where if the economy starts picking up, the number of companies will surprise actually the analyst expectations. I think will be far higher.
Okay.
I think one of the expectations which we have, I think broad market, the question which always comes on the valuations.
Yeah.
But the valuation is something which is always debatable. It's something which will never get a right answer. At the same time, the valuations, if it is actually looked at in conjunction with an expectation on the growth, then definitely I think the valuation is justifiable.
Okay.
At the same time, the kind of expectation that is now getting built up on earnings upgrades. If that continues to remain good, then the broad market also will get comfort on the valuation.
But just very quickly, are there specific sectors, where that applies, in the sense that we've had earnings kick off with an Infi and an RIL both delivering.
True.
So there's not really been any disappointment, but there could be some pockets of the market where we are expecting to see that disappointment. Would you be able to point out where you're not really hoping to see too much?
I think clearly, I think one of the risks, I think from the market point of view is the expectations are high, and definitely which also reflects on the stock price, it reflects on the overall market sentiment. I think clearly if there is a bit of delay in terms of the growth coming back, I think definitely maybe the expectation that we are getting in terms of the return on rather the results expectations, which are likely to actually be better actually in the coming quarter, maybe get postponed one more quarter. But I think the broad disappointments, I think in our view, will be relatively lower.
Okay.
I think the number of companies which I think surprise the market, I think will be far higher. And also we need to still look at it, given the fact that so far we have not seen any kind of rate cut, and we have not got any signal in terms of rate cut coming down. I mean rather the interest rates coming down. I think clearly if you look at the bond market, the way it behaves, the way the interest rate swap market has been behaving, there has been a substantial drop.
But
the five-year interest rate swaps have dropped almost 1%.
But the cost of funding has come down.
Yes.
That's what they're arguing. You don't need a rate cut at this point, because one could argue that that's what the banking sector at this point is saying, that who needs a rate cut when they're already cutting deposit rates? How would you play banking then? Because the infra theme all comes down to where the financing comes in.
Correct.
How would you now see the banking sector, which will feel the brunt of the rates being sticky at that end, but cost of funding coming down, but nobody borrowing at this point?
True. I think the whole banking sector is something which is the way we have been playing is there are three different segments of the market, which is because your retail, your wholesale funding, as well as the wholesale deposit bank. I think clearly if you look at it from a broader market point of view, the retail loans books have been very strong, and the growth continues to remain very strong. And we are also looking at the pickup in the commercial vehicle sales and the pickup in the two-wheelers, to pick up in the car sales. All these things have to reflect on the banking industry's growth. And having said that, I think wholesale market is the one which most of the time takes a backseat, given the fact that the current NPA levels in the banking systems have still not come to a level which is more acceptable. And we still not got any kind of visibility how the NPAs will change. And we still not got any kind of comfort that how the existing NPAs I think will perform as we move forward, etc. I think given that kind of fact, we'll probably see wherever we are taking a bet on cyclical recovery, we may probably get delayed.
All right, let's take another very quick break. When we come back, we'll also talk to Birla about whether or not he sees potential in the broader market. Stay tuned, back in a moment. Welcome back. Here with us here on Market Guru. Birla, what are you thinking with regards to the broader markets at this point? Do you see value over there? Do you see potential, or do you feel it's safer to stay away until there's a bit more stability?
I think the broad market, it's always been interesting to discuss about. I think the one thing which we believe that it's emerged actually for India is we are in a long-term reasonably bull market. When I mean bull market, the equity is an asset class which was not getting accepted in general among the investing public. Now will have the increased level of acceptance. And second is we'll probably see a lot more stability and lower volatility in the equity market in general, given the fact expectations will remain high and will continue to remain high even going forward. And that's being the case, we will probably get into a bit of longer term stable, steady, reasonably bull market with a high level of confidence coming in equity. And having said that, I think the recent run-up in the market, always better to have somewhat of consolidations. I think what we see in terms of behavior of the market at this point of time is some sectors of course getting favored and some sectors not getting favored. At the same time, so there is some bit of profit booking coming in. And the big change that has also happened is the domestic investors are actually in a better position to buy the companies into the market and the increased exposure to the equity both through the mutual funds as well as direct. And that's in my view, I think setting the tone very clearly for reasonably good equity market as we move forward.
So what you're basically saying out here is that we're just seeing that little bit of a pause in the major bull run, the major momentum that we'd seen. The bull run pretty much is intact, is that what you're saying?
Exactly.
And if that's the case then, Bala, let's say from a 12 to 24 month horizon, do you believe the market still has good potential to give investors returns? And if so, what kind of percentage can one expect?
So I think it's tricky to put any number to this. But having said that, in general, the thumb rule which we normally apply is the nominal GDP growth plus about 4 to 5% risk premium if you attach it. Equity in general and as an asset class over a longer term, when I mean longer term, it could be 5 years or 10 years, should give an average of about 17-18% kind of return.
Okay.
And anybody who gets more than that or anybody gets less than that, it's something which is depending upon how some of the things are changing.
Sure.
But otherwise, on average, one should always expect 17-18%. But ultimately, what rewards the equity investors is the passions what they bring on the table of staying invested for longer term is the one ultimately get the benefit.
Bala, have you realigned a little bit over the last 2 or 3 months in terms of your funds, in terms of how you're looking at this market? As I was mentioning, there's a bit of a churn happening. Have you re-looked at it? Are you getting excited about something such as the auto pack moving up and earnings there starting to look up, sales numbers looking up versus some of the other plays that are not looking so hot now? Have you decided on what you're doing?
I think though I don't manage money myself, but if I go by what the portfolio managers' actions have been, I think clearly the sectors where they've gone overweight, rather little overweight to the index weight is about IT.
Yeah.
And then auto ancillary sectors we have been overweight. Pharmaceuticals we have been overweight to the index. Even FMCG, selectively we have come back to the FMCG as a sectors and we now come to the neutral weight with respect to the index, or maybe in some cases even a little more overweight. And we have always been bullish on two-wheeler as an industry within the automobile sectors, two-wheelers as well as on auto ancillaries companies and export-driven companies, even the engineering and manufacturing, engineering goods and manufacturing sectors, we have been reasonably bullish. And the cyclicals, especially within the banking sectors, we have been actually having a neutral weight. At the same time, of course, we juggle between something which is focused on retail loan book, something which is focused on the wholesale loan book. So that's why I think we keep playing within the sectors. And having said that, I think clearly the last 1 month or so, I think overall exposure to cyclicals have been relatively lower, and the overall exposure to the companies which are largely benefiting out of the exports have been relatively higher.
So going ahead now, Bala, what's the next big trigger point or move that you'll be watching out for? We've discussed monetary policy, you still don't know when that's going to happen. Earnings, of course, are in swing. October's quiet with all the holidays as well. So, what do we look forward to now?
I think interestingly it's something which we are now getting in for the next 3-4 months is a festival season.
Right.
Okay.
And I think clearly festival season is a true reflection of the mood of the consumer.
Okay.
In terms of the purchasing power, in terms of the way they spend. I would assume for the next 3 to 4 months would be actually a better period from the point of view of getting a trend reasonably fixed with respect to how the consumers are spending. And second is also the good monsoon, relatively a good monsoon this year. We will probably see the second half of the crop is being better than the first half. If the second crop I think is going to be better, I think especially the Jan-February period, the harvest season is good, I think we'll not only actually have a better food grain stocks availability, we'll also probably see the inflation decisively coming down, so which essentially means that one of the directions which you need to look at, how the inflation going to pan out, as a result of that how the interest rate is going to pan out, more as a signal for showcasing the confidence that all of us I think have to build in terms of building a story for India, which I think will probably get reflected in the last quarter of the current financial year.
Bala, you mentioned about the fact that retail investors have probably started to come back into this market. We've been seeing some kind of inflows coming as well. What's your one piece of advice to them? Because again, they started to look at this market. They've been feeling the cheer coming in as well over the last couple of months. But one message to them?
I think stay with a lot of conviction.
Okay.
The markets will be volatile, and the different point of time, different views will keep coming in. Should I invest today? Should I invest tomorrow? Or should I, having made investments, have I made right decisions or wrong decisions? But ultimately, I think we are looking at longer term the benefit that could come out of equity investing. So essentially mean that investors have to stay invested with a lot of convictions, for keeping in mind the money is meant for longer term, not for measuring the performance in the short term.
All right. On that note, Bala, thank you so much for joining us today. Pleasure having you with us in our studios. That's all we have time for on Market Guru. Do stay tuned. Lots more coming up on the other side.